Well, happy Saturday, everyone. Welcome to the Breakfast Investing Challenge. I think this is week 8. I'm starting to lose track of the weeks here. And in case you're not familiar, the main idea of the Breakfast Investing Challenge, is that if you invest a small amount weekly into something that generates compound interest, it can grow into something substantial over time. So the breakfast idea is that we're doing this with Bonnie's account. We're putting in the equivalent of a nice breakfast, which is $30, and then we're adding a tip to cover the fees. And so $30 a week over time can grow. We started with $100 and growing it by 30, and then it's in a platform called Polar Tensor, which is generating. It has been generating between 2 and 3% actual returns into the account to compound each week, and that can grow. So today, the main topic today is investing $100 instead of spending $100 can alter your financial future. You've probably all heard the phrase, a dollar saved is a dollar earned. Really be more appropriate to think a dollar saved is more like $2 to $4 earned, depending on what it is, and that a dollar invested can be more like 100 or $10 or more over time. So that's the idea. Maybe a dollar was a lot of money within Ben Franklin's time, but today maybe they're going to use $100. So this is something that is easy. You've got $100. Either you've got it from a client, or you've earned it by working. And just to put it into context, that $100 may represent 5 to 10 hours of work, depending on how much you're getting paid. So, basically, if you thought that $100 is 10 hours of work, maybe you think twice about just squandering it. So, what does $100 buy today? Well, generally it can buy a moderately nice dinner. If you drink a lot, it can be a lot more than $100, but a pretty good dinner for $100, and or a night at the movies. The movie doesn't cost you that much, but the popcorn does. So take your family out to go to movie night at a theater. That's probably about $100. So I wrote an article about what that $100 means if you, instead of spending it, you invested it. So I think that one of the ideas here is, we think $100 is not a lot. He says, okay, $100. Okay, yeah. I can't. It doesn't really mean anything if I put it in a bank and it's earning, 3% a year at most. What's the point? So, and really, it's not going to generate. Having it sitting in your mattress or having it sitting in a low income or no interest account, it's not going to do any good. But you can invest that and get something out of it. And I'm going to show you here what that $100 could mean in something that compounds interest weekly. So I wrote an article. Let's pop that up on the screen. And this is at the breakfastinvestingchallenge.com website. And there are quite a few articles. One of the very first articles I put up here was on getting on the right side of compound interest. Like, I really think if you can educate your children to understand compound interest when they're in school still, and how to stay on the right side of compound interest, you'll be doing them a great favor. I know I'm going to say I spent most of my life on the wrong side of compound interest, so I'm the poster boy for what not to do, really. But I've changed my ways, and I have an opportunity here to actually do things differently than I have in the past. So in this article here, there's this little money tree. I really like this because Bonnie and I have started a garden. We're growing vegetables, and really investing is a lot like growing a garden. You invest some money into it, some time into it, put some water, and it'll pay dividends over the years. So yeah, so there we go. So here the story is basically you've got this $100, and however you got it, 5 to 10 hours of work maybe, or maybe you charge $100 an hour. It's hard to say. Anyway, the idea here is what if you think it doesn't really matter much. I'm going to just show the numbers here, and so I'm putting my money in to a AI trading platform called Polar Tensor, and it's fairly consistently returned after all of the commissions and fees and everything, 2 to 3% of real profit per week into my account. And that if that continues, if it averages, even if it was 1% per week, that's substantial. So I'm just going to go to the numbers. Let's just assume it continues at 2%, and let's see what this is. So if you just simply put the $100 in, and this is a calculation from the calculator site. It's a free calculator site. If you're a regular investor, you probably have your own financial calculator, and you can work it out. So here, according to the calculator site, this $100 over 5 years is generated over $17,000. And so even if it was 1%, it'd be over 10, which is pretty good return for just sticking the equivalent of a dinner into something that generates interest. And that's what. So I've been putting $30 into Bonnie's account every week. I'm putting in more like 1,000 into my own, and so but even if I just put 1,000 in, that's really quite substantial over time. So I'm gonna go back to here. What this means, like another way, it says every $100 you stick into this investment can generate, and that 17,000, that's like a year tuition for one of your children a year. So this is meaningful, and you get into these numbers here, and that's a house in a modest area. In Vancouver, my joke in Vancouver is $500,000 will buy you a really nice chicken coop. Toronto and San Francisco or Paris, any of those big high demand markets, really it takes quite a lot of money to live there, or a nice recreational vehicle. So we've got I'm broadcasting from a RV, and when it was brand new, it was probably about that amount of money, and a little less. We didn't buy it new, and it's certainly not worth that now. But anyway, there we go. So this is one of the questions is, what would you use that money for? You have all sorts of things you might want to use it for travel, or just simply to have it. And so this is a live snapshot I took of my Polar Tensor account on Thursday. In full disclosure, Friday was not such a great day and actually lost a little bit of money, but it was looking really good up until Thursday. And so it already made, like the previous week, it made 2.78%. And then it was at 2.46%. It ended up being about an even 2%. And I don't get all that money in my account because there's some performance fees and things. But anyway, so I brought up on here that there's actually a red losing trade here, and I give this platform credibility. I've been using this for 3 months, and it's been pretty consistent. And I trust it. I think it's going to work out. I wrote an article on the website about it if you want to go learn more. And here's this. This is a kind of a graph about what this money means. I think if we were to look at Bonnie's, we're looking at it's earning, I think it just earned over $5 this week. And you say, well, what can you do with $5? And then, but it's going to go. And this little graph is like a compound interest graph, and it goes along. You don't really earn a lot for a while, and then it starts accelerating, and then you get up into something meaningful over time. And I wrote an article on being on the other side of compound interest, and if this was a chart for a loan, for example, like this RV we're sitting in, we bought that. I thought I had enough cash to pay it out, but it didn't work out that way. And we ended up paying a loan. It was on what they call the never never plan. So it's like upside down here. We're paying a lot of principal for it, and a lot of just paying for the interest, and it didn't really start paying down the principal until recently. So I've paid it all completely, but it would go it would probably end up being 15 years before I paid it off, and that that adds up. That's mostly you're paying interest all the time. So yeah. Anyway, so but the main point here is that your $100 investment, if you put it in, even just one, it'll start growing over time, and then every additional $100 you put in there will also grow over time. And if you can put in more, some of you will probably not want to bother with that. They'll just put in, a lump sum, $1,000 or $10,000, and just watch it grow. Go have a good life. Check it out. In a, check it weekly, and then, check it out. Maybe every once in a while, and in a few years, you can start taking some money out of that, and you can provide fund a lot of things that you want to do, or replace your earnings. Really, my goal is I want to have this the investment here replace my income, and we're getting close here. I'm gonna go back, turn this off. So last year I've had sort of consulting income from clients, marketing clients, publishing clients over the years, but that's kind of slowed down, and I haven't been pursuing getting more of those. And then last year I had 2 part-time jobs in Merit for 2 First Nations groups, and that generated pretty good income. And this year, neither of those are reliable, so it's much sparser. So I've already replaced the income from those 2 jobs. Yeah, I'm still doing them. I'm on call. If they call me to go drive somebody to a medical appointment, I'm going to do it. And if I end up working on the highway construction thing, I'll go do it. But I'm hoping to get to the point in within a year where all of that income is replaced by investment income. And I mentioned in the little show notes that I'm diversifying, and I've started putting money into more traditional things like exchange traded funds, EFTs, mutual funds, and some stocks. I'm putting mostly into Canadian bank related things, Canadian things. I don't know if you know, historically, Canadian banks have been very solid. The last time the U.S. economy melted down, Canadian banks bought up a lot of failing banks in the U.S. So if you go down anywhere down the East Coast, down to Florida, you'll see things like TD and BMO and RBC, and with an acronym. So you get the Royal Bank and the Toronto Dominion and Bank of Montreal. It's just Americans don't recognize those as Canadian banks, but they are. And anyway, so that's the idea here. The other thing I'm diversifying in is I'm using a platform called Kraken, which is it's cryptocurrencies. And there are 2 things. They've got bundles, which in which case they combine a bunch. They have people who have curated, say, 4 or 5 different crypto assets things, and it's more like that's kind of like a mutual fund. And so the idea is that they're a little bit more resilient to the ups and downs of the very fickle crypto market, and will grow over time. Again, if the whole market goes down, they go down too. But if everything spikes, everything will go up. So we'll see what happens with that. Far less stable than the mutual fund market, but kind of an adventure anyway. And the other thing is they have staking. It's basically you buy some assets and then you allow it for staking, because a lot of the cryptos are used for things like blockchain funding, games, all sorts of stuff. There's a lot of uses for those um, assets, those digital assets, and basically by staking, they get a pay you a percentage. It's anywhere from about 3% to 20%. So I've been putting things into uh, staking that pays from 10 to 20%. And again, if the assets go up, that's they pay in that asset, so it can be worth a lot. And if they go down, then it's not worth a lot. So anyway, the whole that idea is you don't put all your money in one basket, spread it out, spread out the risk, and but by far the return on with Polar Tensor, which is close to 2% per week compounded. That's as long as that keeps going, that's going to be more significant, life changing. So there we go. And I'm just going to put this little banner up on the screen again, just to remind you there's this one here. So the main theme here was investing in $100 instead of spending $100 can alter your financial future. My invitation is for you to join the Breakfast Investing Challenge at breakfastinvestingchallenge.com. But if nothing else, just think about it the next time you've got that $100 and you're going to go blow it on something, consider if you could invest that somewhere in an investment of your choice, and that could be meaningful over time. Again, the idea of the Breakfast Investing Challenge is if you put in regular investments, I'm using $30 a week with Bonnie's account. If you put that into something, it's like the educational savings funds that are there's various names that when your child is young and you start putting in $50 a month or something into it, by the time they're graduating from high school with compound interest, that's enough for them to do a few things. Give them more options, without you having to put a second mortgage on your house just to send them to college. Anyway, just an idea. And meanwhile, go out and find some pancakes and berries and maple syrup and enjoy your day. Thank you.